Alrighty, everyone, welcome back to a new video. This is going to be a video here on the playbook. So this has been well asked for and demanded by most of you that we come up with a updated version of the playbook. As many of you guys know, we do have a original video that we recorded about the playbook and everything about it, but this is going to be the updated version. You know, it's been about over a year now since we really updated this, and a lot has changed. A lot has remained the same. So we want to talk about that. We want to talk about the importance of a playbook, the mentality of a playbook, the reason behind having it, and the adjustments and the tweaks that it's okay to make along the way, right? The playbook is simply your foundation. For me, it is the end all be all, I should say, right? It is my commanding chief operating officer, right? I move when the playbook asks me to move. I stay when the playbook asks me to stay. And I think I can only credit my success here to the playbook. It's not that I'm so great or I'm such a great trader or anything like that. It's just I'm a great executor of following the plan, of being disciplined and being committed to the playbook, right? So I credit the playbook for all my success up until this point, and we are going to talk about that a little bit here today. So let's go ahead and get started. It's going to be about a 15, I would say 20-minute video here, so grab your notepads and let's get ready to rock and roll. So let's talk a little bit about the mentality when it comes to the playbook. When I heard the term playbook, it really hit me. Early on as a struggling trader, I was pretty much just jumping from strategy to strategy. I kept hearing the term strategy tossed around a bunch, and I was looking for it. I was trying to put it together, and I was taking this guy's strategy and that guy's strategy and trying to figure this thing out, and really didn't catch anything, right? They really didn't catch any traction. Everyone's strategy on YouTube was like, wait for the Fibonacci and, have a goal for 50 pips a day or take 4 trades a day. I don't know, man. It was just very like open-ended, if that makes sense. So again, I was struggling at that point and really wanted to find some sort of consistency in my trading. So actually ended up, and I started in Forex, by the way. So I was learning from a lot of Forex guys, but I started to look towards other traders, like traders that were professional, stock traders or option traders or traders that worked down in Manhattan, and people who have been doing this for a very, very long time. And I started to seek some knowledge from them and seek some guidance or some sort of like information from them. These are guys that have been trading for 15, 20, 25, 30, 35 years, and I wanted to know what they were doing, right? I wanted to know how they were able to create such a long-term profitable business when it comes to their trading, because that's what trading is, right? When you seriously step in the door here, you are starting a business, you are starting a company, and it has to be treated with that type of seriousness in order for you to really, really catch some consistency and make some money long term. So one of the things I kept hearing them say throughout the interviews was I kept hearing this term get thrown around, the playbook, the playbook, the playbook. And naturally that makes sense to me. I'm an athlete growing up and played sports growing up, and I've heard that term many times, and it just makes sense, right? It's playbook is a book with a few plays in it, right? And that just clicked for me. And once I began to dive deep into this concept of the playbook, I started to wrap my head around it a little bit, and I noticed that they were talking about, hey, we have one setup, that's it. I'm like, what? At that time I was taking 5, 10, 15 trades a day. I didn't even have a setup. I was taking every setup. If the market was moving, that was my setup, right? So I was just diving, jumping at volume, doing silly stuff, like things that every new beginner trader does. And so I heard these guys talking about, yeah, we have one setup, 2, 3 setups, and that's it. That's all we do. We look for that one setup, and if it's there, it's there. If it's not, it's not. And I was like, wow, that's a totally different perspective than what I came into trading thinking, right? I thought I'm an ambitious guy. I'm a hustler. I've been in sales, right? I know how to work. So like I thought, hey, the more you trade, the more money you can make. So why not have 15, 20 setups and we could just bring in the dough, right? And I thought that that's how it went. But you know, that never really got me anywhere. And then I started hearing these guys talking about, hey, we got one play. If it's there, one play, same time every day. If it's there, we nail it with big bucks. If it's not, we sit back and enjoy the day. And I'm like, that sounds a lot more interesting than what I'm doing. So I began to dive into this idea of the playbook, and you know, this is just a little bit of mentality when it comes to the playbook. So I started studying a bunch of the setups that I was taking, and at that time, I was I was taking everything, right? So I actually had about 8 setups of my own, right? That I took from different mentors, different courses, and all that good stuff. So I heard these guys talking a lot about collecting data, collecting data, collecting data, and I've always heard that, but you guys like me, you ever feel like, you know, someone lays out a plan and they say, hey, do this, this, and that, and you're like, yeah, I'll do everything but that, you know? That I don't need to do that one. That was me when it came to journaling trades. So I'm like, yeah, I'll wait for the confirmations and I'll do this and I'll do that. But you know, the whole journaling thing, I don't need that. I got it all up here in my head, right? But I really didn't. So I started to treat collecting data very serious. And what I started to do is I started to take a look at these 8 setups and I started to track the data to collect a win rate, right? And as I did that, what I noticed was, you know, this one really only had like a 50% win rate. And this one here had like a, you know, 10% win rate or like 20% win rate. This one here had a 40% win rate. This guy had a 60%. This one 65. And you know, I was really left with like these 3 entry types that I've noticed all produced a 75+% win rate. So boom, right there was a turning point in my trading career because I locked in and I said, you know what? Let me stop doing what isn't working and let me focus more on what is working. Right. And I think that can help a lot of people. You know, you really have to take a look at what's working and what's not working. If you don't do this, if you don't audit your trading on a, let's say, week to week or month to month or quarter by quarter basis, you won't understand if you're falling off, right, or falling off tilt. So really tracking data to get the understanding of, you know, what am I doing here? What's working? What's not working is a major key to continuing to adjust on the fly in this game, right? Some of you guys were revenge trading. You're over trading. Look at the results of that. Are those the results that are going to bring you what you so desire? And if they are, well, by all means, keep doing them. But if they aren't, right, it's time to switch things up. So I had to get rid of them, right? I had to get rid of this. And by the way, I was doing all the over trading and the over risking and all that stuff up until this point here that I'm going to talk to you about, right? So once I started collecting data, I started to really want to be like these guys. You know, these dudes were professional. They still are. They're, you know, I don't want to name any names because they are pretty big traders, but just let's keep it simple here, right? They were talking about setups, they were talking about entries. I went ahead and I got inspired. I collected some data. I found out that most of my setups are absolute garbage, and three of them were the money makers. So I started to put all my focus, attention, and effort into understanding the details and the nuances that made these work and made them not work. Okay, so we're going to talk about those setups now. Let's break it down here. I'm going to draw some candles. Bear with me. Maybe I should have done this before the video, but let me draw out some realistic type of candles here. Now, just want to put an emphasis here. First and foremost, the playbook is all based off of the higher time frame. So when it comes to my trading, I want to look for clues on to where the higher time frames are going to go, and I want to be able to ride that wave with them, right? So I want to be able to get in that direction, get my little piece of the pie, and then get out of the market. So in order to do that, I'm going to focus on the daily and the 4-hour candle, anticipating where that candle might go and how that candle might move over the course of the session, right? Over the next couple hours, right? So this is let's talk about the higher time frame real quick. Let me grab this. So let's say higher time frame, right? And let's just call it higher time frame, right? Let's just call it the 4 hour chart. So this is the 4 hour chart, 4 hour chart. And let's say that the previous 4 hour candle closed bullish, creating a support, or just let's just say it's in a bullish trend, and I'm expecting the next 4 hour candle to make a bottom wick and then begin to run up and continue moving on. Let's say the daily's bullish as well, and we just have a bullish bias for this day in these examples that we're going to talk about here today. So let's say, okay, we have a bullish bias. So first things first, what we're going to look for is every single day when you come to the market, you should have a pre-market routine. You should be understanding, hey, what's coming out in the news today, what can affect price, what can throw price around if I'm in a position or looking for a position, what are the higher time frames saying, and how can we find opportunities to hunt on the lower time frame. So let's say that the 4 hour candles look like this right here, and we're expecting this bullish candle to happen, but let's just say it's, just starting out and we don't have that big move just yet, but that's what we're kind of expecting. And maybe it looks something like this. It's almost ready to go. So let's go ahead and talk about the lower time frames here, because you're going to come to one of two different markets every day, right? So when you show up to the desk every day, you're either going to be in a ranging market or you're going to be in a trending market, right? So let's talk about this. Bear with me. I'm going to draw a few candles here, and then we're going to talk about some price action based off of like lower time frames. So let's say that you are currently looking for buys, right? But you get to the desk and all of a sudden the play has already happened, right? So the play has already happened, and you are now wondering, hey, should I get into a buy? Should I, hold off and wait? And all of a sudden, price begins to range like this. So candles are just printing now side by side, and they're just kind of forming up some sort of consolidation, right? Let's say you have big wicks and stuff like that, where you can tell how candles are beginning to get weak and slow down, and looking for an opportunity to create some sort of a range before the next move up, right? So let's say that you have this range right here, and you come to the desk that day and you're looking for buys, but as you get there, price is in a bit of a ranging market here. So you mark off your ranges. Let me redraw this one. You mark off your ranges here. You've got your support, you've got your resistance. A lot of times this high right here is going to be, let's say, the high right here, right? So you're really just trying to wait on that candle's high, the 4 hour, to go ahead and get in. And you see this wick right here. That wick right there is going to represent this clean range to the left that we are going to be looking to target, right? So as we're waiting, it's very important to wait for candles to close, right? As you can see, this candle wicked up through there, but failed to actually push up. So if you would have entered a buy here, you would have probably been stopped out, right? So it's very, very important for candles to close before you take entries. And if you didn't get stopped out there, then maybe you'll get stopped out on something like that, right? And now you're out. So very, very important for candles to waiting on candles to close. But when they do, right, and you get a closure outside of this range here, that's when we have an opportunity to say, okay, we have a breakout here. So what I mean by that is this candle has finally stepped up and made a decision to say, hey, we're ready to go, right? It's time. While we're in this range right here, price is trying to figure out where it wants to go. A lot of times what you'll notice is that price had just made a really, really big move. Let's say this is the London session, right, where you had this big move up here, right? And then it kind of slowed down, pulled back, and started to range. So price wants to continue moving up now. Let's say this is the New York session, which is the session that I like to trade. And this candle here finally says, hey, we're going up, right? I've confirmed it by closing outside of the range, and we're ready to go. So that's what we're looking for. And again, going back to why it's so important to wait for candles to close is because a lot of times, and we have the live stream and we hear it all the time and see it all the time, traders just being too jumpy, too on edge, and really just getting ahead of themselves, right? So we see it all the time where like traders will come in and they'll take a sell here, and they'll get stopped out, and then they'll take a buy here. They'll be like, you know what, I knew it was going to be a buy. They take a buy there, and they get stopped out, and then this candle closed. They go, I should have stuck with my sell bias, blah 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 blah, and then they take another sell, and price comes up and stops them out, and they're just having a rough time, right? And I've been there, right? I've been that trader before. But then you have the pros, right, who are just sitting tight. They're saying, hey, whatever happens within this range right here, I do not care. Whatever happens, wherever price goes, I am not touching this white range right here, or let's call it the red range, because I like to call it the no trade range, right? So anything that happens in there doesn't really matter to me. I'm waiting for that breakout. Once this candle actually decides to close above, that's my signal, and my opportunity is to take a buy on the very next candle, which is going to be the breakout candle. You're most likely re-breaking the highs. You're going to push up, retest that resistance. Typically, I'm going to close partials right there and then just let the runners go. And at that point, when this move happens, this is what's happening on the 4-hour time frame, is that this thing is now ready to go, fills the wick, and then continues driving on just as anticipated. So that is the breakout. That's the most common trade you're going to see. That's the most common setup, I believe, that you're going to see, is because price does this all the time, especially if you're trading gold like me. Price will trend. It'll make a range, and then I like to call the range like the gas station, right? That's where price is fueling up to make its next move. So that's a little bit about the breakout. Very simple concept, very simple idea. Excuse me. Understand that these positions work best when volume is in the market, meaning session open, news event, or some sort of a breakout like this. When you have volume in the market, that's your time to operate and execute on these playbook setups. So that is the breakout. Let's move on. Let's talk a little bit about the onion play. So the onion play, by the way, shout out to Don Vo. Some of you guys know Don. He's the one that created these onion, celery plays and all that good stuff. So we took the names from him. So we got to give him credit, because he's been awesome in terms of just making things a little bit more clear for me, and giving me an opportunity to really sink my teeth into like a visual playbook. So thanks, Don. And we've been able to spend time in the markets on our own, which has helped us really learn the nuances and the details of, and the fine tuning of what goes into the setups and the playbook itself. So let's talk about the onion play real quick. So same thing like the breakout, right? Let's say instead of this day where you kind of came into a ranging market, right? Today you come into a trending market. So what I mean by that is, let's say you're bullish on the day, right? And price is moving up, and let's just say you trade the New York session like I do, right? And the London boys got all the money here, right, during the London session, and we don't want to take a buy right now, right? We just have 1, 2, 3, 4 bullish candles. We're getting candles to kind of slow up and begin to lose some steam here. So we're not going to just jump into a buy, right? We're not going to say, oh my God, price is going up, let's take a buy. Right, we are going to simply wait for a pullback, and what I mean by that is we need a resistance, right? We need price to come back down, create some sort of a pullback, and then once price plants a support, a strong support too, and a lot of times, like I said, keep an eye out on this, because you will notice as price begins to slow down and lose steam and close like smaller candles, that's when you know that the actual reversal or the next move up is about to go down. So once I see that clues of that, what I'm looking for now is a pretty strong support, right? If we can plant some sort of support, wrong shape here. If we could plant a support like this, strong support, that's going to be my opportunity to say, okay, I'm going to get ready to take a buy. Let's go back to the 4-hour chart here again. The 4-hour, same example, it's looking just like this, right? So it's looking just like this, where candles are ready to get going. The break of the high is the break of that high, and this range here is the wick fill, and that's what we're looking to take advantage of. So once that next candle opens up, I'm looking for it to make a low, a bottom wick, and then once it does that, I am in there, right? So I am in there, and I'm looking to tap into that nearest resistance level right here, and once we tap into that level, that's where I'm taking partials, that's where I'm cutting profits and securing a bag, and that right there is the onion play, right? So that's what we call the onion play. Very simple move. It's a buy off of support, and it works very, very lovely along with the higher time frame, because again, the range here, right? This range and this range, these are the wick fills on the higher time frame. So obviously this candle is going to want to fill that wick, and this is what the market structure looks like on, let's say, a 30-minute or a 15-minute time frame. Yeah, I think I forgot to mention that a little earlier. All these playbook setups I like taking best on the 30-minute time frame, right? 30-minute is going to be the best. You also have the 15-minute that works as well, and you have the 1 hour, right? These are the time frames that I like to look for these plays on. 15-minute, 30-minute, 1 hour time frames. So just in case you guys were wondering that, those are the time frames that I'm looking at for execution. So, and again, all of these playbook positions just happen to come during high times of volume, which is obviously a beautiful thing. So keep in mind, once you create that support in a trending market, you're bullish, but you have to wait for a pullback. So once that support is formed, that's your confirmation candle here, right? This guy here, and then this is your trading candle. So the playbook has on every single position outside of the fade, which we're going to talk about in a moment, has a confirmation candle and a trading candle, right? Confirmation candle, trading candle. So keep in mind, as long as you're getting that confirmation candle, you're good to go, and then you can execute. So let's go ahead and talk about the celery play, also known as the booby trap candle, whatever you guys want to call it. It is what it is, right? Let's just understand the pattern recognition, right? Pattern recognition is a sign of genius. So if you can really begin to understand these, you can call yourself a genius. So let's talk about the celery. So I'm not going to draw too many candles here for the opportunity to spare some time here, but let's just say that you're in a situation where you're looking for a potential breakout, right? And we'll draw a quick little range here. And say, okay, we're looking for some sort of a bullish breakout, and then we can kind of go ahead and take our buys, right? So let's just say we are waiting for that, and as we're waiting for it, let's just say this is the top of the range, right? You get your breakout. So let's just go like this, boom. So let's say you have buys above this level right here. So there's buys above this resistance right here to the left. This candle closes above. Let me make a little bit of a better closure than that. Let's say that this guy here closes above, boom, like this. And now we're ready to go. So we're right here. We're at breakout, right? So we're looking for a breakout. But while we're waiting, and let's say this is the 30-minute time frame. While we're waiting, price is just stalling on making this bottom wick here, right? So price is kind of coming down and back and forth, up and down. It doesn't really know what it wants to do. Maybe it kind of comes up, but not necessarily all the way. And now there's like 5 minutes left on the 30-minute candle, right? And I'm sitting there and I'm thinking, you know what? Maybe, just maybe what I'll do here is I'll wait for this candle to close, right? Because if this candle closes back in the range, then yeah, the buys aren't looking the hottest, right? At that point, we may have an onion play for price to actually move down, right? To retest the low. So I don't want to take a buy if that candle closes back below the range. So what I'm going to do is I'm going to delete my buy stop. So let's say I had a buy stop here. I'm just going to delete it. And I'm going to wait for this red candle to close, right? And as long as this candle closes above the range, meaning above that resistance to the left, right? As long as it does that, the buys are good to go, right? So at that point, what I'm going to do is I'm going to set a buy stop right here on the break of this high, right here. And typically, again, this is going to happen during high times of volume. And this is my confirmation candle, this bearish closure above the range. And this right here is my entry, right? That yellow line. And typically, this is going to be one heck of a trade, especially when you line that up with volume. It works out just amazing. So keep in mind, this is your confirmation candle here. And one thing I do want to say about this candle, this confirmation candle on the celery booby trap play, is it does not matter what this candle closes as, right? So what I mean by that is it doesn't matter if this candle is closing bullish or bearish. What matters most is the fact that this candle is either closing above or below this range here. And if it's closing above, doesn't matter, it could be bullish or bearish. When you break those highs, this thing is goner, right? But if it closes below, you have to be very careful, because this is where, you may get caught in a fake out. So you don't want that to happen. I have a video on my YouTube that describes how to avoid fake outs, and all that good stuff. But you watch the live stream, see how we do it live as well. But yeah, keep in mind that candle is your confirmation candle. This is your trading candle. And again, that is what we call the celery / booby trap play. So those are the three positions in which I began to really study, right? And then I noticed guys like Don were using them, guys like Raja were using them, and I was like, man, this is perfect. Like, these guys are taking these type of setups. I'm understanding the look here. I'm understanding the mentality. And at that point, it was, hey, if I come to the desk and it don't look like this, or this, then I do not trade. I do not pull the trigger. And that's when I finally discovered what a no trade day was. Can you believe it? Going to the desk, showing up, and actually not taking a trade, right? Pretty interesting. But this is where I began to find success. This is where I began to find profitability. Now, on those no trade days, you can still learn things, right? So let's talk about the fade, because this is where we learned, right? So we've talked about we've talked about the breakout, right? We've talked about the onion, we've talked about the celery, and now let's talk about the fade, because the fade is a very interesting idea, and it's also very, I should say, it happens often, right? It happens often. So let's go back. Let me draw your attention back to the 4-hour chart here for a second. So let's talk about our bias here, right? So if we have a bias of the 4-hour candle is what, bullish here, right? But let's say that on the 4-hour time frame, that bullish closure is happening somewhere where there was previous resistance, strong resistance, right? Big level resistance. And what we like to say here is that, hey, this 4-hour candle, although it's bullish, it's tapped its target, right? It's got to where it needed to go. If I was in a buy, let's just say from here, there's a white arrow there, but let me make that a candle, right? Let me make it a candle here. If I was in a buy and I seen price coming into these levels, I'd be taking profits, right? So this is where we came up with the idea, and we didn't come up with it, right? This is where we noticed the idea. And when I say we, I mean me and the Time to Eat community, man. We're live every single day. Like, you got to come join us. You got to come see this in real time, real life, and how it plays out. But what we noticed is that as the 4-hour candle came into that level of resistance, or hit its own target, that we may not need to be bullish anymore, right? There may be some signs that say, hey, being that we've tapped that target, the next 4-hour candle, although the previous one's bullish, this one may go bearish, right? It may begin to pull back from this, resistance level that you've tapped into here. So what we began to do was study the lower time frames, right? And a lot of times what we noticed is that on the lower time frame, you were tapping major areas, filling ranges, right? So let's say let's say the 4-hour candle or the 30-minute time frame looked like this, where the candles had come down, right? They've come down, so it made like a nice clean range, right? And let's say this was a major resistance that was formed here. And on the 30-minute time frame, let's just say like the onion play already happened, right? Or the celery play, or the breakout, right? That had already went down. So what we notice here is that we have officially, bear with me here while I draw some candles, we have officially tapped target. So let's say on the 1-hour time frame or 30-minute time frame, this is what you see, right? So you see candles look like this. Boom. And a lot of times the candles will give you clues to, like, maybe it has no top wick here, which means it has no range, or it begins to really kind of like slow up in these areas and not really be able to do something, right? So let's say now you see that the 4-hour targets have been tapped. You see how the 30-minute targets have been tapped. And now you begin to say, okay, maybe we can anticipate the pullback, right? So what we used to do, and again, all these plays, the key word is volume here, right? Volume, volume, volume. Keep that word in mind. Write it down in your notepad. Volume, right? You want volume in the market while you're doing the or attempting these setups here. So what we would normally wait for is a nice perfect resistance to be formed, and then we would take our entry, right? And say, oh yeah, we're going to take sells. Awesome. So we notice that when it's high times of volume, and let's just call it like the New York sessions, let's say the New York session open or the New York or the NYSE open, right? We're going to be waiting. So this candle's open. This one is about to happen at, let's call it 9:30 a.m. Eastern. Do we really think, right? And this is what caused a lot of no trade days for us. Or for me, do we really think that 9:30, one of the most highest volatile volume times of the day, is going to give us this little perfect pretty resistance for us to take a sell on the next trade, on the next candle? I don't think so, right? I don't think so. So a lot of times when we were waiting for this candle here to close, what would happen would be, and we knew price can go down here, and we were right about the direction, but guess what? By the time the 9:30 candle closed, it looks something like this, right? And now how do we take a sell after that? Right? So going back to, there's things that you can learn in your no trade days. We learned how to get a good read on what we call the fade, right? We learned when the opportunity was coming and we missed it, right? We missed that trade and missed that trade and missed that trade. But every time we missed it, we began to understand it more, get a better read on it, and really dial in to the point where now we can take these incredible impulse trades on this target tapped concept and be able to number one, not only avoid those no trade days, but be able to participate in the move that we knew was happening, right? A lot of you guys know I live stream, so we do this in front of like 1,000+ people every day, and I would go ahead and I'd say, hey man, this is right here, this is the best. So I'm waiting for that pretty little resistance, right? And price looks like this, and I'm like, if we break this low right here, this thing's going to be a goner. This is going to be a goner. This is where a good impulse trade would turn out. And by the way, thanks to the chat, because the chat would hear me say that, and they would go ahead and say, okay, what did he say? Break the low would be a good entry. They go ahead and take the trade, and I'm just watching this thing sell off, and they're in my YouTube chat saying, hey, Nick, thanks, man. Appreciate the 60 pips. Appreciate the 70 pips, man. That was the fastest $1,000 I ever made. And I'm sitting there thinking, well, why am I not in it, right? If I know that's going to go down, if I have a good read on it, why am I not in it? So that's where I've, got back into these impulse entries, got back into these more aggressive type of trades. Now, the one thing about the fade is that most of the time you're going against the higher time frame, right? So remember, higher time frames bullish. Look at 1 hour's closing strong bullish as well, right? Like, so you're a lot of times going against it, but you're in this flow, right? Where you understand, hey, we kind of flowed up and we flowed down, and we've kind of tapped into that target now with volume coming in. If we don't break the high, this is where we should pull back, and just being in sync with the market, in tune with the market, having experience, having chart time under my belt has really, really helped me develop these entries when it comes to the fade. We're going to talk about entries in just a moment, and then we're going to wrap this thing up. But when we're talking about the fade, what we're looking for is some sort of opportunity for us to fill the wick during high times of volume, and that not happening, right? So coming up and activating buyers, let's say in this case, and by the way, this is a buy that I would have been in last year, right, at times that I'm no longer in this year. So I know that buyers are getting activated because that was me at one point, and then my sell stops are on the break of the low, right? And then once you have those sell stops on the break of the low, if you fail to break this high, excuse me, if you fail to break this high right here and then begin to break that low, typically you are good for that volume push, and that's our opportunity to take advantage of the fade. So The fade is the only the only setup here that doesn't include a confirmation candle like the rest of them, right? All these guys have confirmation candles outside of the fade. The fade is more so the confirmation comes from the overall direction. The overall, did target get tapped, and do we expect to keep moving or not keep moving? And normally you would expect to keep moving, right? But if this high on the 4-hour fails to break and you start breaking the lows, very, very high chance you're running into a position that we like to call the fade. So that's the fade. Let's talk about entries really quick, and then we'll kind of wrap this thing up with some final thoughts, and I'll leave you guys to study. So when it comes to entries, I'm gonna use the onion play here as an example. There's only two entries I really believe in and like to take, and that is the entries are on the break of the current candle high or the break of the previous candle high, and vice versa if you're looking for sells. So let's talk about that real quick, and let's talk first about the current candle high. So everything has to do with this candle right here, this bullish candle. So I want you to pay attention to the wick of that candle. So as this candle closes, this candle is going to have a wick on it, most likely, right? So let's draw the wick, let's say right here. So as this candle closes, it has a wick, and a lot of times what the next candle will do is it will actually flip bullish briefly, right? And then it will come back down to begin to make its bottom wick. And as it's coming back up, this is your opportunity to enter on the break of the current candle high. And this is what I mean right there, the break of that high, and your opportunity here is to fill the wick, right? Typically when we fill that wick could be like 10, 12, 15, 18 pips, 20 pips. Typically that's where I'm going to go break even, or sometimes even close partials, right? But the idea is to maybe go break even there and then have candles create a new high, right? And then maybe the next candle will be able to wick down and then get you to your target. But the most important piece here is the entry, right? So the entry in this case was taken on the current candle high, right? Current candle high. And the reason you don't want to enter on the previous one in this case is because you want to participate in between those yellow lines, right? You want to actually collect the pips that the market has to offer there. So there are times where you do want to enter on the previous candle high, but again, paying attention to that wick, let me show you what I mean. So let's draw a different type of wick on this candle, top wick, and let's say it looks something like this, right? So that's your top wick, and then this is your current candle top wick. So the difference between there, I would say, between this yellow box here, right? Let's just say is 2 pips, 3 pips, 4 pips. In this case, I would rather sacrifice those 3 or 4 pips for a much more confirmed entry. And what I mean by that is I'd rather take this position on the break of the previous candle high, because that gives me the most valid idea that if we are breaking the high, we should continue up to make a new high. So if the wick is, let's say, close to let's say the previous candle wick is close to the current candle wick, I will use that one. But if the previous candle wick is a little further, then I need to use the current candle because I want to participate in that move. So you might have to rewind that back, listen to it a few times. You also may have to rewind this back too, because let's talk about stop losses, right? So if you're taking an entry on the current candle high, right? Let me just fix this a little bit. Current candle high here, right? Let's just say it was that yellow line. Then what you can do is you can use previous candle stops, right? So if I'm taking it on the current candle high, I want to use previous candle stops because we could always come back and break the current low but respect it, right? But if you're using, let's just say, previous candle highs as your entry, meaning you're going to enter off the previous candle, then that's when I would say it's okay to use current candle lows if you want to. These stop losses also may be a little too tight for you. Maybe the best bet is just to leave it below all the wicks. That way you give your trade a little bit of an opportunity and room to breathe. So that's a little bit about entries, a little bit about stop losses. Same thing, entry here is going to be typically on the break of either the current 4-hour low or like a previous 15-30 minute low as you settle in and look for the fade. So that is a little bit about the updated version of the playbook. Keep in mind that the playbook is your recipe, your masterpiece, your opportunity to actually have some sort of a roadmap in the markets, right? Like I said earlier, if I don't see this, or this happening in the markets, I do not trade. I am not going to put my money out there in the markets for when I see anything other than this familiar price action right here that I'm showing you, right? This price action, these setups right now, if you do the math, let's just call it a 70, I think it's 80, but let's just call it 75% win rate, right? So if we know that the playbook has a 75% win rate, meaning these setups, that means that all we have to do is execute, right? Execution of the playbook is our edge. And we know that this number does not say 100, right? It says 75. So the real success is over the course of the next 100 trades. And if you will follow this plan and follow these setups, then that means at the end of 100 trades, you should have about 75 winners, 25 losers, and that's the game, right? The idea is to run that 100 trades as fast as possible so you can get the desired outcome. Now again, there should be 25 losers in there. So when you take a loss, you can't think, and let me rephrase that. If you take a loss on one of these plays here, you cannot be down on yourself, right? You cannot be down on yourself. You need to, as a trader, right, you want to put all the pressure onto the playbook. And that should be good news to you and music to your ears, because that takes the pressure off of you, right? So once I understood, hey, I don't have to be Mr. Greatest Trader in the world. All I have to do is follow a proven system that works, and I can get those same exact results. So that's why if you ever come to our live streams and you see us win these great trades off of these setups that I'm showing you, you'll never see me jump up and down, say, hooray, hurrah, hooroo, yeah, oh my God, it's amazing. Never, right? Because I didn't do anything special, right? All I did was execute on the probability of the idea working. All I did was trust the playbook, right? And same thing when I take a loss. If I take a loss and it's off of one of these playbook setups, I'm never down on myself. I'm never crying and upset and questioning myself, because I understand the playbook took that loss. And a lot of you guys who are watching this, you guys are professionals, man. You guys are much smarter than me. And you've played D1 athletics, and you've got degrees, and you have a great family and a great profession, and you start taking losses in trading, and you feel like you're a loser, right? And that's not the case, man. That's not the case. The playbook is going to do the winning and the losing for you. All your job is to do is to execute day in, day out, collect your data. It's a race to 100 trades. Have fun while you're doing it, and really, really stay disciplined, man. Trust me, when you can stay disciplined to doing the same things day in and day out, the game becomes easy, right? One of the best questions I ever got on the live stream was, hey, Nick, what's the hardest part about trading? And my answer was very simple. The hardest part about trading is actually understanding that it's not that hard at all. And it's really not that hard at all when you have a playbook, when you're serious with it, and you can, rinse and repeat day in and day out. So hopefully this video helps. This is up to you, gang. This is up to you to stay disciplined, to stay professional, to stay responsible, and only take trades when you have familiar price action based off of actual data that works versus just some random idea and thought. All right, so I'm gonna leave it there. I hope this helped. We went over a little bit of mentality, we went all through the technicals, and some final closing thoughts. So this is the Playbook 2.0 video. I hope you guys enjoyed it, and we will see you on the next one. Later, gang.